Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, July 18th at about 3:15 p.m. Eastern. Well, Wall Street indexes are just off their highs now after the news came out a little earlier today that President Donald Trump is pushing for a minimum 15 to 20% tariff on all EU or European Union goods. On the flip side, on the happier note, U.S. consumer sentiment improved in July, while inflation expectations continued to tick lower. So now let's look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, the SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now, we just keep making new highs here for the last 2 weeks. Nothing to complain about there. So after making a fresh record new intraday high today at about 629, that would be dollars. When I captured this chart, the SPY was trading right at $627.32, right at its new all-time highs. And that is about 3% above the prior all-time closing high on February 19th at about $613. Now, as we look back on the hard right of the edge of this chart here, we see that the SPY is, of course, as it would be, still trading above its major moving averages here. The 20-day is coming in at $617, and I think that's at 37 cents. Anyway, or 87. That one's hard to see. At any rate, right at around 617, the 20 days coming in, the green line. The 50-day moving average, I believe, is coming in at about $601. And the 200-day moving average, the black line, is coming in at 505. So we know that since the February, back here again, since the February all-time closing high at 612.93, I called it 613, we know that the SPY rolled over and dove down to that April 7th low that indeed everybody had at $481.80. Then it bounced straight up on April the 9th, then it fell back down and came back down and back down to 508 here. So we're going to keep that number where we know where it is. And then we know that the SPY rallied up in a very, very steep uptrend here, went back through the 20-day, the 50-day, very steep uptrend here. Rallied up here to the May highs at 595, then dipped back down to the 200-day moving average, then rallied up off of that, walked up the 20-day throughout June, then started trading at even a higher premium here to the 20-day moving average, again up to where we are now at about $627. So, and did all that on, I'm going to say lower than usual because it's summer months volume. A lot of traders take off during this time of year. So we can see here that we had a little softer than usual volume, which is totally normal right now. So again, we're back up here at $627.32 or about $62.70 on the S&P 500 itself. Now, since we made this April 7th low at about 482, we'll call it, all the way up to where we are now, this is actually a 30% gain. So for those lucky traders who got in down here and have ridden it up this far with, you've made 30%. Very sweet uptrend. Now we can look down here at the 14-day RSI. We know that it turned red here, was overbought, and has been through a lot of July. See where the red marks is? That's where the 14-day RSI rises above the 70 line, and it just indicates that the particular asset that it's tracking is overbought. We call it in the short term. It is a 14-day RSI. It doesn't mean that that is going to go straight down. It just means that, let's say, we could say it means we're pushing our luck here a little bit, and it has been overbought here for like the whole month of July. Right now it's just down to about 67, 68. So what do we do going forward with this? Well, the same old thing, right? We look for resistance and see where that is. We're at all-time highs, so we'll just call it 628 to make it easier up here. Potential support again down here at the 200-day moving average at 618, I'm going to call it, right here, the red line. At 617, 618. Then we move down here to the 50-day at 601. We have a price pivot here at 592, so we can use that. And we also, of course, have the 613 level here, if I can draw a straight line. So tons and tons of price support, moving average support, and all the way down here, 50-day, 200-day, more price support here. I think this is about 560 right here where we have that pivot, and then that pivot where it was used as resistance and then used as support, this to the 200-day pretty much. So tons of price support and moving average support should the S&P 500 need it. Now, in the coming week, of course, we're going to see how more incoming tariff news will affect the market, and how the earnings, we've got another about 3 weeks of earnings, how the earnings announcements are going to affect the market. Please know that next Wednesday, two big companies, Tesla and Alphabet, are coming out with their earnings. Again, it's getting a little frothy here. I am definitely firming up my protective stops. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. And of course, that includes the Magnificent Seven. It includes Meta, Alphabet, NVIDIA, Microsoft, that whole group. Now, the Qs also hit an all-time high today at about 565 when I captured this chart. The Qs was trading at $560.65. So again, new all-time highs this week and today. We'll have to see where it closes. The Qs, again, trading at 560.65 right now, almost 561. That is about 3% above its prior all-time closing highs back here in February 19th at $539.52 back here. And since the Qs made that all-time high at 539 and change in February, we know that it too fell down, plunged pretty hard, rolled over and dropped all the way down to its low on April 7th. That was at about 402 right here, this low. In fact, you can look at the RSI here. We're always talking about it being overbought, but look at how oversold it got. Look where it turned blue here when it goes down to or below the 30 line. That's the other line on the 14-day RSI, Relative Strength Index. So then it rallied up a little when the Qs rallied up a little and then fell back down and got really overbought here when the Qs fell that hard down to 402. Then we know when this happened, the Qs rallied back up after that April 7th. And on April 9th, they rallied back up to the 20-day. Look how that line stopped, pretty much stopped at close several times here. Then it fell back to 428, which hopefully we don't need, but good to know if we do. Then climbed back up at a very steep angle, almost like straight up, right? Through the 20-day, through the 50-day, through the 200-day, and then continued to move higher and higher again to where we are now. And this move from 402 up to 560 has been a 39% run, which is huge for the market. I will tell you that is huge. So we have resistance here. If we look, what do we do next week? We have resistance here. We're going to call it at 565. We have potential support here at the 20-day moving average at 550. Of course, we have this prior high here at 539 and change. That can still be potential support. We've got the 50-day moving average here. Wow, that's hard to see. At 531, I think. 531 is what the 50-day moving average comes in at, or 532, I guess it is. We round it off. So, and then down to the right into here at 520 and change, 532 actually, I think. Anyway, right in here. And then on down to the 200-day and so forth. So again, like the SPY, lots of potential moving average and prior price support for the Qs. We look down here at the 14-day RSI. It's still overbought in the short term. It's almost at the 70 line. And so all we can remember here, all we have to work with is this beautiful uptrend, and then lots of potential price support and moving average support should it roll over. Now, is the market frothy here? Yes, I believe it is. So I know what happens in frothy is that if any little bit of bad news comes out, a lot of traders who have really good profits, and I'm hopefully that you're among them, will throw in the towel here. I've been taking profits for the last couple of weeks, just in the short term, just to make sure that I don't give them back. So again, we have a lot of earnings coming out in the coming week, and we know that techs are getting frothy, so please trade carefully. Our final chart today is a daily chart of the Utilities Select Sector Spider Fund, the XLU. This is an ETF that has 31 holdings. Top holdings here include NextEra Energy, Constellation Energy, the Southern Company, Duke Energy, American Electric Power Company, and so forth. And you're going to look at me and say, Toni, really? In the market we're in, isn't this defensive? And I'm going to say, absolutely. Absolutely, it certainly is. Look, I just went through way over 100 stocks and ETFs especially, to look for something to present to you today. And they're good, they're fantastic, but so many of them are trading like this with their 20-day moving average like this. And it's wonderful. They're great for profits, but I don't want to particularly buy at these levels. I just don't. So again, after looking at more than 100 ETFs, when I came across the XLU, I went, well, there's one that isn't stretched way, way high, because I'm not buying when they're stretched way, way high. Actually, the XLU here looks like it might break out. I looked down at the volume. Volume is strong, and we could see that in the SPY and especially the Qs, it's dropping a little bit, but volume is coming in here strong. Now, this is all-time highs for the XLU, and it went up today to about 84, and then it pulled back, and when I captured this chart today, the XLU is trading at $83.78. So yes, I feel like being in something, let's call it safer right now. It is, of course, trading above its 20-day moving average, which is coming in at 81.82, call it 82. And the 50-day moving average, they're right together. It's also trading at 81 and change. So 81.36, I think. The 200-day moving average is just below down here at 79. So why, you say, well, why is this just trading sideways? Well, it's because money's been going into tech stocks. Money's been going into like lithium and nuclear and of course technology. So it's going to stay out of the utilities. That's boring in a market like this, and I agree. But the boring is going to look pretty good if the other parts of the market start lower. So again, the XLU is at prior highs right now. Now, if we look left on this chart, we can see back in November that the XLU did make a high here at about 83. Then it fell down here to 74. Then it retested up here to about 77, retested down here to 74, jumped up to 80 here, straight up, then traveled in a range here from about 76 to 80 during February and March, then fell like everybody else, but not as hard in April, down to 71, then rallied back up through its major moving averages, and then broke, see these highs here? Moved up and out, back real quick, and most everything did in May, then jumped up higher here. So jumped up here to about 82 right here in May, and then started walking up its 20-day moving average a little bit. Again, in this kind of a market, utilities do tend to move sideways, but fell back down here the end of June to the 50-day, and then just started climbing up here just a tiny bit, minding its own business here. And then today we got this green candle, and now it's up right close to actually all-time highs here. So if the rest of the market decides that it needs to take a breather, pull back a little bit, many times money will flow then into the defensive stocks, which of course are healthcare, utilities, agriculture, and so forth. So we'll see what happens here. So in the coming week, if the XLU can stay above the 20-day moving average here, and that's coming in at about, we're going to call it $82, okay? $82 here where the 50 and the 20 are. So if it can stay above its 20-day at 82, and if the market's behaving reasonably well, and if the market's just falling a little bit, then utilities, who knows, they might keep going. If the market's behaving reasonably well, I will buy a small position in my trading portfolio, and I'm going to put my stop here at $81.25. If and when $81.25, if and when the XLU closes above 85, which of course you can't see on this chart, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLU in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Swing Trade Successfully, which is definitely one of the most favorite, you learn how to target the best stocks to trade, exactly where and when to enter, and when to take the juiciest gains from price upswings. You'll also discover how to use my secret money management strategies that really saves you money and makes your profits bigger. Our new low price for this program is only $187. And by the way, some of my programs listed here are only $59. When you order, you're going to receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, How to Swing Trade Successfully, Trade the Trend to Profits, How to Read Charts, 3 Winning Setups, Bottom Fish Like a Pro, and more, discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or is easier still, just check on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.